certain issues need ironing, but I think it's good if it at least has an acceptance.
Yeah, our Jyoti Prakash Gadia actually deals on the ground, and he sees both sides of the coin. We developers might be cribbing that we are not getting funding, and he also will listen to the bankers that so many builders are getting into default situation. So with a neutrality of situation, you can just explain whether going for new product is an essential one, or should we stick on to whatever we are doing now?
Thank you, sir. And I will just wear a consultant hat, because that's why the client comes to us and he asks us, sir, how can you raise bank funding for us? So if we cannot bring and we cannot do some innovation, then client definitely will not come to us. Today I will explain you 7 ways through which you can raise the bank funding. First way that we are going to discuss, it is about the MSME definition के अंदर में कैसे आप पैसा ले सकते हैं. How you can classify your project under the MSME definition and you can take the project. In some of the banks, they have classified real estate project as an MSME project where the project cost is less than 125 crores and the funding requirement is around 50 crores. So this is where they classify this project as an MSME project, that real estate project. Or some banks, they have also classified that where the entire project is within 100 crores of. So I think so in case if we can only work with the bank and tell them ki sir, if you the real estate project only can classify as per the MSME norms of the country where 250 crores of top line and requirement of 50 crore whatever that is there, I think so our requirement can be satisfied. Till time every bank is making their own norms that how we should classify the real estate project as an MSME definition project. So this is one way that we can raise money with. The second way that you can also approach a banker for raising money, where you can club 2 or 3 projects of your own, because what is happening under RERA is this, is that 70% of your money, you have to use this money under the construction cost. So bank is asking you ki what is the peak level deficit that you are having in this next 3 years of time frame. So in this next 3 years of deficit, it is difficult to project, because every time you are doing slab 1 construction or you are doing some construction link, the funding is coming in. So there is, though the cash flow difference is not coming in. So what we are telling to a banker, you are just clubbing 2 or 3 projects together. Then you are telling ki sir, you either in these 3 SPVs you make common borrower, or you make all the 3 projects at one borrower, and then you combine the cash flow and tell to a banker, I require an OD limit, because it is not necessary that customer advances whatever I am projected, out of which only 60 to 70% will come in time. So there is a gap of 20 to 30% of the customer advance which may not come in time. So combining with 2 or 3 projects together, the customer advances, then the deficit becomes little bigger for the banker to come and fund the project. So this is the second way through which you can raise the bank funding. Third, you can always tell bank that since we are talking about it, there is always a cash budget system in a working capital arrangement. There are 2 types of arrangement through which the bank can give money. One is through what we call as an MPBF type of a funding, which Pooja ma'am has definitely explained to you. The second way of funding, which we call as a cash budgeting methodology, where all the contractors are getting payment. In the cash budgeting methodology, you are including, like in the month of January, if you want to make the drawing power for the month of February, since there is no stock, nothing like that, you only have to give them what is the expenditure that you are going to incur in this next month and what is the inflow that you are expecting. So whatever is the deficit between the inflow and the inflow and the outflow, that deficit of that 75% of that deficit will be treated as the drawing power for the next month. So that's on the cash budgeting methodology, through which we also call it as a cash budget methodology. And then to give the another comfort, we can tell to a banker that you can also make it as a drop line OD limit, where we are telling the banker, if you are taking into a 4-year loan, for the first 2 years there will be no limit reduction. From the 25th month onwards, whatever is the repayment period, It will be in the form of a drop line OD, it will be in the form of a cash budgeting, but from the 25th month onward, my overall term loan amount or my OD limit will start getting decreasing. But the interest will be paid only on the amount that you have utilized only for that particular month. This is the third methodology through which any developer can get bank funding. Fourth methodology is where customer, developer and the banker combined, and then they create a structure which we earlier used to call as which we used to termed as a subvention scheme. In this subvention scheme, since it is not happening, but there are lot many affordable housing schemes, where in the affordable housing scheme where the government is auctioning and government is giving, like in Haryana. So all the projects or the customer are readily identified that who would be my customer. So we are approaching the bank, sir, he is my ultimate beneficiary or he is my ultimate customer for the flat. You are already known because the government has already told them कि उसको lottery करके निकाल के बता दिया कि this particular guy is going to be your customer for that particular flat. Now that customer file is already there with you. Now with that customer file along with, and the bank knows that how much is the customer eligibility at that point of time, and he is going to get that flat there. So with the customer giving him an undertaking, only thing is that interest need to be charged to the project, not to the customer. So banker exactly knows that there is a sale which has already happened there, and there is a customer which is already there, and this is how this entire, which we call as under this tripartite scheme, this also is a very, very good scheme through which also you can get the project funded. Fifth scheme, which we also call it that there is a lot of approvals which is required, and in the towns like Bombay, where the approvals come in the mid of a project. There are some approvals where you are getting mid-size of a project. So now, what is the innovation that you can do in a sanction letter is that you can always term the bank's sanction letter. You should not mention the particular date of disbursement. You should always mention that after this approval is come, 2 months after the approval date, 3 months after this approval date. So that what happens is that because in 90 days the loan has to be get repaid or there is an NPA norms, but the flexibility in the sanction letter itself we can start drafting, so that instead of putting a rigidity date, you can always put that these are some of the milestones through which my disbursement can get delayed or my project can get delayed. Based on that, you can always say 3 months based on this, 2 months based on that, and that is also banks are accepting the sanction letter like that. But the overall tenure of the loan will remain 5 years or for 4 years, whatever that we mention about. Lastly, there are 2 types of things which the bankers told that the land is not getting funded. There are 2 types of land funding which bankers are definitely doing. So sorry, Tapan sir. Just for the recap of the thing, in case if the land is auctioned by the government, auction at the time of the auction of the government, in case if there is the entire project cost, that time the banks is also funding 60%, 70%, depending upon your creditability and other thing, that direct payment is going to the government if you can prove to the banker. That time it is happening. The land purchasing is happening in the form of TDI, where in the first instance you have purchased the land, their bank is not funding. But in case if there is an increase in the FSI, and then you need to purchase the TDI, at that time it is included in the project cost, and that time the banks are for funding that TDI cost increment, whatever that you are talking about. Lastly, sir, in terms of the working capital financing, the easiest way to get it is through a bill discounting limit, where you can get your supplier bill discounting. So these are the 7 methodologies, I think so. In case if we can just innovatively apply, we